Welcome back to our Infinite Banking Versus series. I'm Jonah Dew.
And I'm Sean King, and today we're diving into a hot topic, comparing the infinite banking concept with the traditional 401k plan. These two strategies are at the heart of many retirement discussions, but they couldn't be more different.
Let's start with a quick refresher. The infinite banking concept leverages whole life insurance policies to create your own personal banking system. Your policy builds cash value steadily. It offers tax advantages. It gives you flexibility to borrow against it whenever you need without selling off an asset during a down market.
On the flip side, Jonah, a 401k is an employer-sponsored retirement plan that allows you to invest in a mix of stocks, bonds, and other assets. You get tax-deferred growth and sometimes even employer matching. Ooh. But your money is locked in until retirement, and you're at the mercy of market swings.
Right. And today we're breaking down these two approaches across 8 essential ideals. We want to talk principal protection, guarantees, safety, liquidity, rate of return, use, taxes, long-term legacy. You've got to stick with us. Let's jump right in.
Well, Jonah, let's go ahead and hop into ideal number 1, and that's principal protection. With the 401k, you're largely invested in the market. Think about the dot-com bubble or the 2008 financial crisis. If your portfolio was tech heavy or overly exposed, your principal most likely took a major hit.
Exactly. In contrast, the infinite banking concept is built on whole life insurance that guarantees your cash value that'll grow steadily over time. Your principal is not exposed to these wild market swings. For instance, during the 2008 downturn, many investors saw their 401k balances drop dramatically, whereas a properly structured infinite banking concept policy would have just continued steady, guaranteed growth.
Yeah, it's like having a financial safety net that keeps your money intact no matter what happens in the market.
All right, Sean, next up, let's talk guarantees. So with the 401k, I'm pretty sure returns depend on market performance and the decisions of those fund managers. There's absolutely no contractual promise on growth at all.
Right? You might get stellar returns during a bull market, but there's also the risk of severe losses. I've got to be honest, Jonah, I don't like losing money. Now, IBC, on the other hand, comes with built-in guarantees. Your policy promises a minimum growth rate, and many policies also pay dividends that can boost your cash value further.
So think of it like this. A 401k is a roller coaster ride. You might be hitting some thrilling highs, but you're also on the verge of like your stomach, you know what I mean? Your stomach's churning. Infinite banking is more like a steady train. It's predictable, it's reliable, it's day in, it's day out.
I would consider safety as a pretty important ideal. When it comes to 401ks, even though they're diversified, and it's true, you do have options to place your money in different varying levels of risk investments. At the end of the day, they're still at the mercy of the stock and bond markets. During economic shocks like the market crash in 2008 and the most recent hit during COVID, many investors saw significant losses.
In contrast, the infinite banking concept is backed by the financial strength of long-standing insurance companies. These companies have weathered many economic storms over decades. They're 100, 150, some of them 200 years old. So for example, during the Great Recession, while market-based portfolios were in turmoil, bad, the stability of these insurance companies provided safe harbor for all their policy holders.
Yeah, that peace of mind can be invaluable. It's not just about the numbers, it's about feeling secure with your financial future.
All right, Sean, now let's at least talk about liquidity. With a 401k, your money's meant to be there until retirement, 59 and a half. If you need it early, you face really stiff penalties. I think it's about 10% right now, and ordinary income tax.
Imagine an unexpected medical emergency or a once-in-a-lifetime investment opportunity. Having your funds locked away can be a huge drawback for some people. With IBC though, you have the option to take out policy loans whenever you need cash, without the hassle of penalties or even someone asking you what the money is being used for.
I actually know of a couple people who needed to cover some major home repairs, and instead of withdrawing from their retirement account with those penalties and taxes, they just tapped into their infinite banking policy's cash value and then just took care of the repairs. It was seamless.
I've actually been lucky enough to not find myself in that situation yet, but I did use a policy loan to pay off a sizable amount of high interest credit card debt that seemed to be kind of eating away at all my extra cash. I think that kind of flexibility is a complete game changer for many families and business owners alike. Now here's one we hear all the time. Let's discuss rate of return. Now historically, 401ks have averaged between 7 and 10% annually over the long haul. But those returns aren't guaranteed. They're subject to the volatility of the market, and you better not get scared and sell low, or you're going to be in trouble.
The infinite banking concept, while typically offering more modest annual returns, it provides consistent, predictable growth. For example, during the early 2010s recovery after the recession of 2008, while many 401k accounts were experiencing really erratic swings, the infinite banking policies continued just going up steadily, consistently.
It really comes down to risk versus reward. Are you chasing the potential higher but less predictable returns of the market? Or do you prefer the safety and the reliability of that guaranteed growth rate?
Sean, we have just got to talk about use. It's one of my favorite things to talk about. So a 401k is designed strictly for retirement, meaning you're penalized for early access. It's a long-term investment vehicle with very, very little flexibility.
IBC is different because you can take policy loans from your cash value at any time. You legitimately have a living, breathing asset, whether it's for a new business venture, paying off debt like I mentioned, or even funding a family vacation. IBC gives you access to your money on your terms.
Sean, I've seen entrepreneurs use the infinite banking concept and that cash value to kickstart their ventures without risking their retirement savings. It's literally financial freedom in action.
I feel like that type of flexibility can really empower you to seize opportunities as they arise without feeling like you're trapped by your investment vehicle or worrying about taxes and penalties. Speaking of taxes, we all know that taxes can really eat into your savings. So let's dig into that just a little bit. With a traditional 401k, your contributions grow tax deferred, but you owe taxes on any withdrawals, sometimes at a higher rate if you're in a higher tax bracket in retirement, which of course most people hope to be, because that means you've done quite well for yourself.
The infinite banking concept offers a very tax efficient structure. Your cash value grows tax deferred. When you take a policy loan, you are not hit with immediate taxes. Plus the death benefit is usually paid out tax free to your beneficiaries as well. So you pay taxes once on the money that you earn, and once you get it into the policy, Uncle Sam's gone and out of your hair.
Imagine retiring with less of your hard-earned money being eaten up by taxes. In my opinion, that's a significant advantage when planning your long-term financial strategy.
Finally, let's consider this long-term legacy. When it comes to estate planning, 401ks can be kind of cumbersome. Your heirs, whoever you're passing the money to, might face taxes and the complicated rollover procedures, which actually just reduces the actual wealth that's passed on.
With IBC, the death benefit is a powerful legacy tool. It's actually paid out tax-free, ensuring that your loved ones receive the full benefit of your lifetime savings. Some families have used IBC to create multi-generational wealth, preserving their legacy over many decades. For example, the Rockefellers.
So it's not just about saving for yourself. It's about establishing a financial foundation that can support your family for generations to come.
And that, in many ways, is the ultimate goal of any financial plan, right? Building a secure and long-lasting legacy. So, which system best fits your lifestyle? IBC or the 401k? It truly depends on your individual goals, risk tolerance, and the kind of legacy that you want to build.
If you value guaranteed growth, flexibility in accessing funds, and a powerful tool for generational wealth, the infinite banking concept just might be your best bet. If you're comfortable riding the ups and downs of the market for potentially higher returns and employer benefits, then a 401k might be the thing for you.
Remember guys, there's no one-size-fits-all answer. It's about aligning your financial strategy with your personal values and life goals, whether that means embracing the market's highs and lows, or opting for the steady, reliable growth of IBC. Or maybe you decide to partake in both. The option is yours.
Thanks for joining us today. If you found this discussion valuable, be sure to like, comment, subscribe for more insights. Click the link in the description to watch our full-length presentation on the infinite banking concept, and then just book a call with us to figure out how these strategies might work for your financial future. We'd love to talk with you, and I kid you not, we can help.